Coming up for 20 minutes after 7 o'clock on this Thursday morning. Hello again and thanks for staying with us. Finance Minister Enoch Godongwana's budget speech has been hailed as a business-friendly speech for its raft of investment reforms and its tax relief for individuals and companies. In fact, corporate income tax will be reduced from 28% to 27%, and that's effective from the 31st of March in 2023. Take a listen.
Restructuring the corporate income tax system is an important part of our efforts to create a conducive environment to business to grow, increase investment, and employ more people. As announced in the 2021 budget, the corporate income tax rate will be reduced from 28% to 27%. For companies with the years of assessment ending on or after the 31st of March 2023.
All right, let's place this for you now. Tiaan Herselman is the head of advice at Old Mutual Wealth. He joins us now via our video link. And it's great to see you, Tiaan. Thank you so much indeed for making time. So, help us place the significance of specifically this reduction in the corporate income tax. It's a 1 percentage point change. How big is that really?
It's quite a big reduction from percentage standpoint, but with the additional 180 billion we saw the government bring in, it means they could allow certain cuts in certain places. But I would think we shouldn't be fooled. They are making up that revenue in other places of the budget speech itself. However, it will give a lot of alleviance to business owners, especially on the business side, and trying to get the economy going again. I mean, we're now sitting in day 700, believe it or not, of lockdown since we had our first lockdown. And with the additional 180 billion from commodity prices, we were expecting them to potentially cut the commodity prices. They did make mention of this in the medium-term budget speech as well. So the one thing the finance minister has done has been very consistent.
Absolutely. Yeah, day 700 of what we initially thought was going to be 21 days of lockdown back in March 2020. But of course, what preceded this budget speech was a lot of talk around government creating an environment that's conducive for business to create jobs. And this is, of course, on the back of remarks made at the State of the Nation address about how government isn't the one that creates jobs. I'm sure you know that entire discussion. The reduction in this form of tax, I imagine, is just one step in our attempt to create that environment.
Yes, I think there's a lot of things that the government tried to achieve with this particular budget speech. If you look at this, the kind of place where our joblessness sector is, we are at quite an all-time high. There's unemployment. We see our amount of taxpayers also being reduced. And I think the balance they're trying to get right is creating jobs, but also trying to retain the tax they collect by making sure there's more people in the workplace that can actually contribute to the taxes being built in. It was actually quite some people would say boring budget speech, but I think currently where we are in the world, boring is good after 2 years worth of COVID. And there's a lot of things they didn't change in the background, although there are some interesting tweaks that might affect personal investors saving for retirement. And we saw some hints as to changes they might consider there as well. But I think the one thing they did very well was cut the corporate tax rate. But again, don't be fooled. There are other places where they will most likely make up those taxes.
We'll speak about those places in just a moment. But you were mentioning there just how, the world typically is moving post-COVID. Interestingly enough, yes, there's been a reduction in this corporate income tax, but it's still higher than the Organization for Economic Cooperation and Development average, which is at around 23% or so. What do you read into that? Is there room to cut this tax even further?
I think if they were to cut it further, it would have an impact on revenue generated, although the biggest pot of revenue still comes from the taxpayer base. We are sitting at a quite high tax rate of 45%, which is quite high relative to other countries, and it will be very difficult for them to increase that. They also can't reduce it at the moment because, again, we had this windfall mainly due to commodity prices, but we still are under pressure from revenue collection, considering that our tax base has reduced. So even though it is higher than the norm, I think one can expect to not see that drop too much. I think the one thing people were concerned about, which really would have affected the economy, is the VAT rate, and that's remained unchanged at 15%, which has increased in the last couple of years. Although there was a lot of other things they also didn't increase. Yes, we saw an income tax bracket increase of 4.5% and the general income tax tables. But actually, there's a lot of other things like our interest exemptions, our dividends tax rates, our capital gains tax rates. These things haven't been adjusted for years. And keeping in mind that inflation keeps on going up, if your interest exemption which is 23,000 Rand, has been that for the last 6, 7, 8 years, it does still actually hurt the average person in their pocket.
Yeah, you've mentioned several times that what the government is losing in the reduction of this corporate tax is gaining in other places. Speak to us a bit more about that.
Yeah. So I think, look, there's a couple of things that they've done. Well, I think one thing they haven't done for the first time is the road accident fund, and the fuel levy hasn't been increased. But we saw quite a big increase in sin taxes. Yes, they did increase the personal income tax brackets, but where they are actually making up is in the background. There's a lot of mention of wealth taxes. We didn't see that come in. But if you look at the places they haven't increased, which is your interest exemptions hasn't been increased. The capital gains tax rate, that's still the same. The income tax tables were only adjusted for 4.5%. And now, again, some people might argue that actually isn't inflation. If you look what happened to petrol the last couple of 12 months, petrol hasn't gone up by 4.5%. So I think, again, it's important to note that their biggest form of revenue collection is still from personal income taxes. So the company tax rate, yes, it does impact them. But the fact that they only pushed up the 4.5% on the personal income tax brackets does help them. And again, I don't think we should underestimate the 12-month extension of the COVID grant really does impact them quite a lot. It takes a big part of the budget, the extra windfall of 180 billion. Although I think we'll probably see the government at some stage looking at how do we put a permanent social security grant in place, because I think we are relying too much on the COVID grant that you've been seeing extended for the next 12 months.
Yeah, and it's difficult to speak about the grant and not speak about employment or the lack thereof in a country like ours, because that also automatically leads us to a discussion around the small tax base in this country. Ultimately, we can't have a situation where just about 7 million of the country's 60 million population is carrying about 40% of the entire tax revenue that comes into the country. That's really probably at the heart of the challenge for government, isn't it?
Yeah, and I think if you look at what the Davis Tax Committee did, a couple of years ago, they were trying to look at that and say, well, you've got a small amount of people paying tax. There's still this big gap between, kind of the 1% and the rest of the country. And they thought of solving that via a wealth tax. Now, the minister has veered away from that. There has been other changes in the budget speech in the last couple of years, specifically looking at trust as well. We saw the introduction of Section 7C, which looks at individuals when they send assets to trust via low interest or interest-free loans. And it's funny, we didn't see any of that. The minister's tried to stay away from that to make sure we don't lose more taxpayers abroad. We've seen that outflux of taxpayers leaving the country. So these are kind of the things they're trying to balance, is taking the gap between the 1% in the country and the man on the street, and where do I take taxes from? Now, you'll see your sin taxes always go up, but I must be honest, I think a lot of us were surprised by the fuel levy not being adjusted. I think it's the first time that's happened since the 90s.
Yeah.
So I think you can expect to see them adjust the income tax tables going forward. The wealth tax has been kind of put to the side. The last time we saw a change in that was when we saw the estate duty rate change for amounts above 30 million. But I think at the end of the day, we have to create jobs. Otherwise, down the line, the minister has warned they will have to come after the income tax brackets or the personal income taxpayers. And as you mentioned, there is such a small portion as a percentage that actually currently pay tax in this country that might even get people or lure them away from the country, and also lure investment away as well.
Absolutely. Tiaan Herselman, thanks very much indeed for your time. Really do appreciate it. Tiaan is the head of advice at Old Mutual Wealth. Great chatting to you, sir. Thanks very much indeed. All right, the big story coming out of KZN now, there's a